Turning now to the economy and a pretty positive jobs report. The U.S. Labor Department says employers added an impressive 321,000 jobs in November, keeping the nationwide unemployment rate at 5.8%.
In fact, this year is on course to be the best for job creation since 1999. For a closer look at the numbers and what they mean, we turn to CBS News business analyst Jill Schlesinger. Jill, good morning.
Good morning.
As Vanita said, 321,000 is a pretty impressive number. Is it as good as it looks?
It's very good, and I love the job creation number. Rate's good. There are some negatives inside of the report. So last month, we know that wages did increase month over month, but still, from a year ago, wages are only up by 2.1%. That's just a little bit ahead of the pace of inflation. It's why so many Americans are saying it's hard to keep up. We also still have 6.9 million Americans who are working part-time because they cannot get full-time work. And although the numbers have come down, we still have 2.8 million Americans who've been out of work for more than 6 months. So really good progress. We're not there yet.
But where are we seeing the growth?
Well, this is some very good news. In the last few months, growth has been spread out, and it's been really good across lots of different industries. So we saw business and professional services growing by 86,000, retailers adding 50,000, healthcare workers almost 29,000. Food services, we don't love those jobs. They're low-paying jobs. But construction, 20,000 jobs. Those are usually very well-paying jobs.
We've been talking for months, if not years, about when the economy would really reach kind of a tipping point in terms of job growth. We've seen almost everything else improve except this. Are we finally at that, do you think?
I think we're getting there. I mean, it's been a slow start, right? The first quarter, terrible weather nationwide. The economy contracted. Second and third quarter, much better. We are now coming into a part of the recovery period that looks closer to the long-term growth rate of 3.3%. Again, it's not there yet, but we are coming into this time where I think 2015 could be the year.
We looked at the numbers yesterday. I mean, yesterday was record highs. Is that sort of what you anticipated after seeing the report?
Well, I think the report was funny. The headline came out, stock futures sold off, actually. And the reason is that a lot of investors are concerned that the strength in the economy could prompt the Federal Reserve to actually perhaps raise interest rates sooner rather than later. I should also point out the rally was good yesterday, limited by oil. Oil dropped it down again yesterday. We're down to 35% from the summertime. Oil companies make up a big part of the stock market, and that could limit gains before the end of this year.
So back to this whole issue that you raised, which is the question of wages, which essentially have been flat, since before the recession, if not down. When are wages going to start to come back?
Yeah, that's the magic question. Economists that I speak to are telling me that it looks like next year there are some forces right now, some data inside of manufacturing and non-manufacturing industries where a lot of companies are saying we will start to pay more next year. By the way, another possible limitation to stock market gains, because if companies have to pay more to their employees, great for us, but not so good for the companies and their earnings.
Jill Schlesinger, thanks so much.
Great to be with you.